Hey, folks, if you missed what Ryan Mastro and Geoff Garbacz had to say yesterday on our morning call about silver, stay tuned right now because this is what they said.
Okie doke. Well, I promised we'd run through silver, so we're going to do that right now. It's going to take a couple minutes. What is move in silver all about in 2025? So Ray Dalio recently stated the move in silver means there is a structural shift in the global monetary system. The move is not being driven by demand. I think that's partially true. I don't go 100% that it's only being driven by the shift in the global monetary system. There is demand, and we talk about that later on in this paper. Dalio went on to state that the surge in silver is not a bull market; it's a warning system from the system. So we'll see how that plays out. But I think it's worth paying attention to him because he's a pretty bright guy and he's made a lot of great calls over time. Gold versus silver 2025. You can see there's a big difference. Gold returned 63.68%. Silver returned 144.66. Silver beat by 80.98%. Other commodities struggled in 25 with the exception of soybean. Natural gas fell 27%. Crude fell 8%. So, monetary system globally, what's going on? Central banks are positioning for loss of dollar supremacy as the reserve currency. Central banks believe the monetary system is failing, not silver rising. When the dominant global empire abuses the reserve currency, precious metals signal a problem. Examples over time, Russia, Germany, and the Roman Empire. 3 principles of the monetary system. 1, there's no free lunch. You cannot spend more than you collect. Problematic if debt spreading is greater than military spending, which we're kind of right on the brink of that being the case now. Reserve currency works as long as confidence in the economy. Currently in the U.S., we have political instability from Dalio's viewpoint. Now, I don't buy this. I'm not buying this particular argument. Firing of Fed Governor Lisa Cook and constant criticism of Chairman Powell. There's a lot of other presidents who've been jawboning of the Fed, so I don't think that's unusual. And then lack of fiscal discipline, cuts in 25 when inflation above 3%. I think that's, again, I also not agreement on that. I think that's nitpicky. We decided on 2% when it was down at that level. 3 is not a bad number, and we're actually sub 3 now. We're like 2.8. So I think that's a little overshoot on Dalio's end. Debt cycle. Debt is good when it generates growth that is productive, and he's done more work than anyone I know on debt. Debt's not as good when growth is mixed. Debt is not useful when growth is weak. As it cycles, then move away from reserve currency. Central banks will move from reserve currency to investing in gold and other precious metals. India just increased their amount of gold as an example. We know that China's been doing the same thing for quite a while. Strong currencies are like the Swiss franc they'll go to, Bitcoin and Ethereum and other cryptos. So what happens when the reserve currency fails, if and when it does? And it's not failing right now, but this is to watch. Liquid becomes illiquid. Military actions rise when currency is not as strong. Other central banks no longer hold reserve currency. Other central banks no longer hold and liquidate debt. Need to change with the changes in reserve or be left behind. So his link, if you want to watch this video, it's right there. Separate but not unrelated issues are recent silver margin rate changes. The first hike was December 12th. That was 10%. Second hike, the 29th, was 30%. Why? Because the price swings in 2025 were too great, and they decided that they needed to get control of them from the COMEX and from the CME and from regulators. So there was a lot of influences that caused those margin rate increases. Leverage risk rose due to price rise. So basically they're saying as price went higher, the risk on leverage became greater as people stayed with the leverage that they had. Potentially forced liquidations could threaten market stability. And banks like Citigroup and JP Morgan are caught short silver. They needed relief as well. 8th to 14th, the commodity indexes rebalanced due to big moves in silver. So Bloomberg Commodity Index and S&P GSCI. Bloomberg will see a weight go from 9 to 10 to just under 4%. That's still ongoing right now. You can see down here more pressure will be played out after the 15th. So we got to get through Thursday first before we're done with that. So there could still be forced selling on silver, although today gold is down, but silver is up. As a passive investment, as a passive instrument, managers must sell futures to align with the new weight. Several $1 billion of selling to happen. So all the above moves a discussion from the weakness in the reserve currency to silver weakness. So it kind of shifts where the focus is. Silver will rise in 26 once this exercise is passed. And I think this is potentially only a temporary fix. So it causes me to still want to be positive on silver. And it could be another year of outperformance. So prior pages are devoted to symptom and disease. Demand is also driving part of the rise in silver. 50 to 60% of silver price is based on industrial demand. 40 to 50 is on the remaining balances on investment, jewelry, trading flows, and safe haven behavior. So takeaway is price will rise again in 26 despite efforts to control the increase and protect those who need protection. There you go. There's a quick summary of why silver has done what it's done. Ryan, you got any thoughts?
Yeah, I mean, to me, I think the biggest drivers have been the outsized pressure from central banks around the world that have been buying. I think Russia really started the ball rolling like 2 years ago when they made massive purchases and just said that silver is underpriced. And they saw this anomaly where it's being held in check, and they saw the price manipulation from a lot of the big institutions. JP Morgan's already been fined for it once. So I think you look at that, you look at a lot of the reports that have come out and said that these central banks have been, I don't want to say secretly buying, but have been purchasing without reporting a lot of their purchases, which is typically a custom. So Asia is basically pulling in a boatload, and now it's just not going out. So, I mean, the thing that's not in that report is the current stuff is that, China stopped exporting, US stopped exporting. And, now you have basically trying to do this emergency G7 meeting to figure out how to get silver. So there's a problem. And all it's going to take is one big institution to cover, and then everyone else is going to be left holding the bag. So I think it's going to be this short where a lot of these big institutions are short silver on in a paper manner, not necessarily from the physical, because you can't be short physical, right? But you do it through the paper, and paper is the futures. So they are short these futures and short other derivatives of the futures, right? And basically it's going to be a problem, right? As we keep blowing through these levels, you're going to have a major bank fail, and that's what everyone's been calling for, is a big bank to fail. And then every other one, whoever jumps ship first will probably be the winner, that they don't go bankrupt. And you're probably going to have some of these other ones that have been heavily short this silver, saying it's going down. Bank of America just came out with a fresh short. So, they're getting screwed right now because they put this on before it just jumped again. So, that's a major problem. I've been calling. I had a 5-step plan about 2 months ago of how I thought this would play out, and we're on step like 3. We jumped up a little bit in the sense that I called for Trump to do the export ban just to save the CME, because it's going to be either the CME or London. Right, one of them is going to have a big failure to deliver, and that to me is another point where price goes higher when these institutions cover and there's not enough physical assets to cover. Keep in mind, we've been building up this underproduction volume for 4 years. We've been underproduction in terms of silver. Right now, it used to be over a billion shares. I think it's 1 billion ounces, and we're only doing like 800 million now. So we've been under that production number for a while, and we're short. There's rumors of anywhere up to 500% of that volume is short in paper. So that's a problem, right? And to go to cover it, you can't just go buy physical on the open market because one, China's holding, US is holding, they're not getting rid of it. So I think London's going to fail. So if London fails, we have a price jump. The next couple of things that I think you should start to look for is mergers and acquisitions on some of these bigger names. And you're going to look for industrial companies that need silver to go directly to the miners. And then we've already started to see that. I saw 2 different companies basically go to that level where they're trying to secure their own inventory so they can do their products. Now, you also have innovation. There's a Chinese company that came out, I believe it was a Chinese company that came out and said, we have silver batteries. And, if that were to catch Main Street, in terms of like everyone don't want to use it, then you'd be using at least, I think they said something like 60 to 70% of the annual production. So this doesn't work in that sense that, price is going to start to go down when you have all of this demand all pointing to higher prices. So I think we go a lot further, a lot higher. We've been held in check for, I would say about 2 decades. You think about where we were back in call it 2000, 2002, 2003, we were at $3 in silver. So, now we're here and, we've never gotten back through like 1980 levels. And you also as Ray Dalio basically was trying to say that as the dollar basically continues to as they keep printing, right, as the Fed, the Treasury, and they keep printing more money over and over and over again, the value of that currency should continue to go higher. So, the value of silver should continue to go higher against a currency that just keeps going lower and lower. So that is, if you're looking at it from a dollar adjusted type of number, we're not back to the 1980 levels yet. So it's important to kind of understand how much further that silver can go on a dollar adjusted. So if you take 1980s dollars versus where silver price was, right, we haven't reached that level yet. So I think we can at least reach that. I believe that's another drawing a blank on exactly what it was. I think the exact number was somewhere between 90 and 100 in terms of that number. So a lot of people are calling for much higher numbers. And typically these things don't die on a shallow number. They overshoot these things. So I think there's still plenty of room to run. I've bought the dip every time and been very happy. So I'm hoping everyone else has continued to roll their options. If you're in things like the miners, the silver miners, the juniors, even gold and silver, I'd be adding other metals. I'd be adding platinum, palladium. I'd be adding copper. Like everything is running at this point because of what they're doing with these dollars. It's been proven that China is pushing out excess fiat currency and buying hard assets, right? They are the ones that are buying physical and saying, well, we can push out 100 billion yuan and basically say it's going to keep going. So we're going to keep buying silver. And to me, this is a way that these foreign central banks can really stick it to Wall Street because they know they're all short, right? Yep. We publicize everything, and it's a way that they can turn around and basically screw the Wall Street institutions that have basically held the world captive for decades. So I honestly, I think it's got plenty of room to go. And yeah, we may have some small pullbacks here and there, but I think from the bigger picture, I think like you said, for 26, it's probably a pretty strong bet to continue to go.